Hello and welcome to this week's Australian Share Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within. This week I'll be discussing day trading and what you really need to know to be successful. I will then tell you where I think the All Ordinaries Index is going, and I will look at this week's stocks of interest. Now before we jump into the report, I'd just like to mention that if you have any thoughts on investing, please comment below and be sure to subscribe to our channel to keep up to date when we upload regularly. Let's get into this week's report. I've been mentoring traders for around 2 decades, and the most common statement I've heard in that time from those looking to profit from the market is, "Can you teach me to be a day trader?" Generally when somebody mentions this to me, I ask 2 questions. The first being, why do you desire to be a day trader? And the second question is, do you understand what a day trader is? The answer I get to the first question is always, I want to make more money. And the answer to the second question 90% of the time is no. If the majority of people do not know what a day trader is or does, and they just want to make money, you have to wonder why so many desire to become one. If you've ever Googled trading or learning to trade, then it is highly probable that you've been bombarded with ads in your browsers. Ads promoting how to get rich quick through trading and promising that day trading is the answer to everything. The majority offering something for free to entice you to trade some highly leveraged market like foreign exchange, or FX as it's known, binary options, cryptocurrencies, and more. If day trading highly leveraged markets is the answer, then why does nearly everyone going down this path fail? Quite simply, the heavy promotion around day trading guarantees a lot of money flowing into those promoting it and not those attempting to do it. But if it's so good and so easy, why do so many fail? Before I explain that, let's look at what a day trader is. In simple terms, a day trader is someone who enters into a trade and exits that trade the same day. Normally a day trader will spend the majority of their day watching the market and taking multiple trades in that day. This can range from just a few trades to dozens of trades in any one day. When I ask those who desire to day trade if they want to spend their day looking at a computer screen all day long, the answer always comes back no. They just want to make money. Their goal is to supplement or replace their income. Every now and then I get contacted by someone who tells me that they're a day trader, and all are looking for a better way to make money. I say this because when I ask them to add up the amount of time they put into trading and then divide this into how much money they make out of it, they realize they would get paid more per hour working for McDonald's. If those who are day trading are not making the money, the question remains as to who is actually making the money. This, as I mentioned before, is all the providers of the services who promote, teach, run trading platforms and other services around day trading. So why do so many fail? Well, quite simply, the market is emotional. And when money's involved, emotions get heightened. Fear and greed increases and overtakes logic and reason, especially whilst the market is trading live. This leads to poor decision making and losses or inconsistent results. Further, the overwhelming majority of those attempting to day trade have very little education and experience, and this only magnifies the emotional, poor decision making. Would it surprise you to know that the most successful traders trade less and hold trades for longer than the majority? This practice, whilst profitable for the trader, is less desirable for the brokers and others in the industry. Less trading means less fees, and this is also why day trading is heavily promoted. A few weeks ago I recorded a video on becoming a full-time trader, which is really what the majority wish for, meaning they desire to replace their income from trading. To be successful, you must trade well and not often. Does it really matter that if you have 10 to 30 trades per year and not 30 trades per week? No, it's about making money. What matters is that you make money consistently and achieve your goal. To achieve that, you need the right knowledge and experience. It is not something that happens overnight, and the journey is well worth it. Let's get into this week's stocks. Okay, on the screen right now is a weekly chart of the All Ordinaries Index, and you can see here how last week, which is the week ending the 14th of September, the Australian All Ordinaries Index closed at 6276.3 points. Closed higher than it opened because it opened at 6252 points. Now, you do remember that I did say that the market will fall for 1 to 2 weeks. I didn't think it was going to be any much further than that, but as you can see there on your screen, it fell right down into that target zone of 6213.9, touched it and started to bounce. If I go and have a look at the daily chart just quickly, just to show you how last week unfolded, if we look here, so there's the 7th of September, then we get into Monday, or the Monday to open that 7252. It moved up a little bit, came back down again on the Thursday the 13th, and then came back and closed higher on the 14th. So we need to see that trade above 6291 over the next day or so to determine whether that's the low at the moment in terms of the low that we were expecting, and now the market is more bullish. I'm thinking it could be, but I'm still prepared for the market to fall away for another 1 week, possibly maybe 2, but generally 1 week, because you never ever trade on speculation that the market's had a low, or even a stock that's had a low. You actually make sure that it has had the low or has had the high before you enact your trading. It's one of the things I teach my traders all the time, is trade on confirmation, not speculation. And the majority of people trade in the market speculate a lot, and way too much actually by that way. We're going to look at a couple of stocks at the moment in terms of the consumer industry. Here we've got Woolworths up on your screen right now, one of the great stocks on the Australian market, and you can see here on the left hand side a monthly chart, and on the right hand side we've got a weekly bar chart. Woolworths has been really nicely bullish since July 2016 and moving right up on a nice upward trend on a monthly chart. But let me bring up the weekly chart just to show you what I mean here. It's been a little bit bearish in the last couple of probably 6 to 8 weeks since late July, and it's pulled back in a normal market pullback, and that's what I was expecting. And all too often people are saying, oh, the market's overheated or the market's going to crash, and you get that. And what I'm saying is it's not possible at the moment. The Australian market is very, very solid, and I think it's going to go up into the first quarter of next year. That's what I'm looking at. Don't listen to all the speculators here. Right now, Woolworths is going down. I would expect it to find some support. If I just put a little trend line on here and whack that across here, you can see here how it runs around that sort of angle at the moment. So I think it would find some support pretty quickly and then maybe start to move back up again. If it does find some support and move back up again, it's likely to go above that high of 31.48 that you can see on your screen. Let's look at Westfarmers, another great stock in Australia, and you can see here how, again, it's really taken off, this stock. If we look at the market here, it's had this beautiful run up. It's broken out more recently from this big sideways pattern. So some of the people would have had Westfarmers, I suppose, Westfarmers since 2013 would have been going, what the hell's going on with this stock? And losing a little bit of patience with it. But what I always liked about it was it wasn't falling away. All this time, it's when that Masters was involved in the group and everything else and holding it all back. And now it's broken the shackles and really taken off. So at this point in time, Westfarmers is looking like a great stock. It wouldn't surprise me if we came back down for 1 or 2 weeks. A bit of a pullback a little bit, just easing off on that run, because it did move up from about $40 to over $50. 25% run over a few months. It probably will come back 5 to 10%. Then it might be a nice place to get into that stock. Let's look at another one, Kosta Group. This is a smaller stock, and interestingly, this is a stock from, was actually a business from Geelong in Victoria, where I'm from, and it's a very long-term family-owned fruit and vegetable type of business, and that's where it started out, so very well known. A lot of Costa holdings throughout that sort of region, and you can see here how this stock has just been in a beautiful uptrend since 2003, and really took off. I think there was a backdoor listing from that point of view back from 2015, but it's moved from $2 to $9, so it's just coming back a little bit at this point in time. Looking over at the weekly chart, I think if you look at this, you'd be quite happy with this stock if you did own it. It's likely to find some support around that sort of $6 mark. So this could be that little dark horse that you wait for it to get into it on that pullback and then take it on to the next run up past that $9 mark. So it's looking really good. The last one I want to talk about today is Grain Corp, and have a look at these charts. The left-hand side, as I said, is always the monthly chart, and the right-hand side, the weekly chart. It is one of those stocks in Grain Corp. It's a very cyclical stock, so it's a trading stock. This is not a buy and hold stock. As you can see there on that chart, you could have bought it at $8 back in early 2000, late 1990s, and it's still around that same price. But in the meantime, it will shoot off depending on what grain prices are actually doing. Right now, it's found a lot of support around that sort of $7 mark. You see how there it's hit it 1, 2, 3, 4 times. So I think it's starting to move up again, but you're looking at between getting back up from there to where its next resistance level is. There's 30% run on that stock if you can get into it nicely. So remember just to click on like at the moment on this YouTube, and also subscribe. Hit that subscribe button right now. That helps us to get a lot more people on this YouTube channel. So hopefully you've enjoyed that. As always, if you want me to look at a stock for you, just shoot us a little text down the bottom, make a comment saying, hey, can you have a look at this stock? If you don't put it down there, I can't cover it for you. So do that. Good luck, good trading. I'll talk to you next week. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on Soundcloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillam, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.